Hello guys. Let's quickly talk about how you can, get into this very simple and straightforward trade. And in this video, I'm going to be showing you one very repetitive behavior of the market, and that is the market always go from internal range liquidity to external range liquidity. That is IRL to ERL. So I'm going to have to label them for you. ERL is external range liquidity, while IRL is internal range liquidity. And of course, as the name implies, you know that internal will mean within, while external will be outside of. Alright, internal range liquidity. Good. So I said that I'm going to be showing you in this video how that every single time, and you would realize it is every single time, price goes from internal range liquidity to external range liquidity, and then back to internal range liquidity, back to external range liquidity. Now, what is internal range liquidity? What is external range liquidity? Basic English: internal range liquidity. It simply means liquidity that is within or inside a range. I mean, English, internal and external. So it means that for you to understand IRL and ERL, you need to be able to understand what a range is. Alright, so there are basic concepts of the market. From strength to market structure, we talk about range, and then we go to ERL, IRL, and all these things. Now, I'm going to focus on what I want to show you today. So, of course, we cannot treat all of these topics, as in depth as we need to. But the reality is, if you really want to understand how to trade the market, understand range properly, understand ERL, IRL properly, and all these things, feel free to register for my upcoming mentorship. The registration is currently ongoing. As at 2 weeks ago, 3 weeks ago, it was just about $20. That's roughly 30,000 naira or 25,000 naira. But right now, the price has increased to $30, which is around 51,000 naira. And very soon, the price is going to hit $40 to $45, and that will be around 75,000 naira. Now, I'm just saying this. You're going to be hearing concepts. This video will be enough for you to understand all that I want to say to you. But if you care to now understand things well so that you can use them a lot better, then you should consider that. Let's quickly get into this. So, first things first, we need to be able to identify a range for us to be able to identify internal range liquidity and external range liquidity. So pay attention to what you have here. You'd realize that price actually took out this low. That is, price dropped here below this one, telling you that we have what we like to call a strong low. So you can call it a strong low, or you simply call it a strong zone. It can be a high, it can be a low. Now, the idea of a strong low and a strong high is that because price has already taken out one low already, right, by sweeping it, the next time price comes towards that area, price is not going to be taking it out. That's the idea. So if we believe that price is not going to take it out, it means it's a good place to enter the market and keep your stop loss, right? Okay, so price gives us that sweep here, it takes it out, and then it goes ahead to give us this small break of structure here, right? Price gives us that small break of structure, and then it also goes ahead to give us this bigger break of structure. Now, you and I know that price will not continue to buy forever, right? So after getting to this point, price started retracing downwards. You see that clearly? Now that price is retracing downwards, we have a low and then we have a high. And that's basically what a range is. Even range in English basically talks about, an expanse between one point to another. Alright, so this is the range. The next thing is, what is internal range liquidity? What is external range liquidity? any liquidity that is in between this low and this high is called internal range liquidity. Any liquidity that is outside of this low and this high is called external range liquidity. So one external range liquidity that we can see very clearly is this. This is the external range liquidity of this particular range, right? It is clearly, you know, outside of the range, which is, and this is another external range liquidity. So the low itself gives you an external range liquidity. The high itself gives you an external range liquidity as well, because they are not inside the range, they are at the boundaries, outside of it. More like what English called outskirts, something like that. Okay. So now that we can identify the internal range liquidity and the external range liquidity, the next thing is, we have identified the external range liquidity. The internal range liquidities are the ones that are inside of the range. All right, so let's see them. This is one of the internal range liquidity because it is inside the range. This is also inside the range, internal range liquidity. This is also inside the range. It's an internal range liquidity. This is also inside the range. It's internal. This guy is also inside the range. So which means that inside your range, you can have as many internal liquidity as possible. You can have as many internal range liquidity as possible. Now, this is what I want to show you in this video. Usually, price will take out some or all. It can be some, it can be all, it can be just one. But at least price will take out at least one internal range liquidity and then turn back to go and take the external range liquidity. By the way, it's going to come for this one, not this one. Why? We already said that this place is a strong zone, so we don't expect price to come there for now. So price would at least protect it for now and take this one out first. Why? Because price is bullish. So since price is bullish, the idea is that you keep taking out the highs. Basic understanding of structure. If you need to understand these things deeper, please consider getting into the mentorship. And of course, you know that the price is still relatively cheaper now. Let's focus on what we have to discuss now. So you use the range to identify the internal range liquidities and the external. Another thing you do with your range is that you use your range to know where you should be buying and where you should be selling. This part is called the premium of the range. That is the upper half of the range. It's called premium. While this lower part of the range, the red one, is called discounts. Okay? So I just had to label that for you so that you understand that for the lower part, don't worry, the color does not matter. But so long it is the lower half, you should be thinking of buying from there. The upper half, you should be thinking of what? Selling from there. Which means you don't sell in premium. You don't buy in premium, you sell there. You don't sell in discount, you buy there. Basic understanding of range. By the way, you might be wondering what tool my range is. Okay, so this range is actually just your Fibonacci retracement tool, nothing more. It's this tool here. Alright, this Fibonacci retracement tool. Can you see that? So the idea is that, sorry about that. The idea is that for me, I edited it to suit the way I like to trade. So normally your Fib retracement tool always looks something like this, right? Remember that this is what your Fibonacci retracement tool always looks like. But I don't need all the 61%, 38%, 86%, 78%, 91.2. I don't need them. Alright, I don't use them. Let me put it that way. So I only use the 50% mark to differentiate the upper and the lower. That's all I need. Alright, so now I want you to understand that what I'm showing you is not just something that happened in this place alone. It happens everywhere in the market. So let's go back a little bit and see how many times it has happened. Okay, so again we have a range here. we have a range here, all right, and from this range you see that there is an internal range liquidity that is taken out here. There is another internal range liquidity that is taken out here. Price enters into the upper part. Remember, I told you the upper is where you sell from. Price entered into the upper part and then does what? Comes down to take out the external range liquidity. So price took out some internal range and comes from the external. Now that price has done that, of course, we have a new range, and you remember that. So again, you see this is our new range, and as you can see, price takes out the internal range. Is the same thing you're going to find over and over. Price takes out internal range liquidity. It even comes here, right? Takes this internal range, turns back for this guy, takes out external range, right? With that, we have another range. This place has mitigated this place, so you can pick this as your new range actually. Or if you like, you can still use here. Anyways, you can see clearly that price takes out internal range here, takes out another internal range liquidity here. These things may not look like internal range liquidity because you're on a higher time frame, but if we go 30 minutes, 15 minutes, you know, and all those guys, you see it hopefully clearer. Alright, so you can see that these guys are actually liquidity zones. Price takes all those liquidity zones out, enters into premium. As you can see, price entered into the upper part and then gives a sell. Why is it selling? To come and take out the external range. Again, price will take internal range and go for external. After external, it will take internal, it will come back for external. Now, price gives you what you call a change of character here, all right, and then it means that instead of selling, we want to start buying. Remember, there's a mitigation here. If you need to understand mitigations better and how to use them, feel free to consider, of course, getting into the mentorship. We're going to deal with all of these things in better details. So, since there's a mitigation there, you can have your range from here to here, because price has given you a break of structure here, right? So let's see how price takes out internal range liquidity again, takes out this internal range liquidity, enters into the what? Lower part, which is what? Discount. And immediately after taking out this internal range liquidity, where is price going to? Price is going for external range liquidity. And then that gives you what? A new range. You see, it is what is happening over and over and over. Again, price comes into this, takes out this internal range, and then it enters into what? Discount zone. What's the next thing? Price comes for external range liquidity. Same thing over and over again. It's not finished. It doesn't finish there. Again, you see, price takes out internal range liquidity and turns back for external range. You see, the external range is upward. Why? Because it's a bullish structure. After that, price gives you some mitigations here. But even at that, you find that it's still always the same internal to external. Internal range taken out. Then the next we go for is external range liquidity. After that, you have your new range. Price takes out this internal range liquidity. I'm showing you how many trades you could have taken on GBP JPY almost every day just by knowing this simple thing. Price takes out all this internal range liquidity, taps into here and comes for what? After internal, the next is external. And then from there, you still again have what? A new range. You can see that it is as simple as this. Price takes internal range liquidity, another internal range liquidity. You see, it will keep taking internal range liquidity until it enters into discount. Now that it has entered into discount, the next thing is for us to go for this external. And then price takes this two, goes for this. That is what led us to this place that we are currently analyzing. And it is exactly the same thing again. Takes out all this internal range liquidity and then see what price does. Because you need to understand that I told you price does not have to take out all the internal range liquidity. It will take out one, some, or all. But what matters is it must take at least one, and it must enter into the discount for a buy or premium for a sell. Now, how do I know that this is where I'm supposed to buy from? Remember what we saw here that told us that this place is a strong zone, which was what? A sweep. Did you notice that same thing sort of happened here? So that is another sweep. And price has gone ahead to mitigate. You see, I keep using mitigation because it's a very important concept when it comes to trading. And like I said, we cannot take all of these topics one after the other. I mean, we're going to end up having 12 hours of class or much more, or maybe a little less. But the point is, let's focus on internal range to external. But if you want to understand mitigation a lot better in details and how to use them effectively, consider, or of course, joining um, my mentorship. Please feel free to send out a message. Now that you know there's a mitigation here, it means that this strong zone is no longer here, but here. Because the order has been mitigated, the money is now here. We'll have to explain all of those things in details in the mentorship. So you already know that this place being in discount and price has taken internal range liquidity, the next thing is to take your buy from here. And where are you targeting? You should know the answer by now. Simply, first target is what? The external range liquidity. And as you can see, that would have given you a 1 to 5 risk to reward. Now, I just showed you how that internal to external is what price has been doing from here every single time. And if we want to check all this, you realize it's the same thing that has been happening over and over and over. So I'm not showing you something that only happened once. No, I'm showing you something that happens every single day, every single time in the market. Any time frame, you will find this same thing, internal to external. Now, another thing is this. If you're somebody who follows my trading, maybe you see my WhatsApp status or you're in my trading community, you know that usually I don't pick my entries like this. Most likely, you will just see 2 lines. It's not even most likely. Usually, my entries are just 2 lines. You just see 2 lines. Because I have my unique way of picking the exact place that price is going to, reverse from. So I'll probably have taken this trade something like this. And the way I pick my entry is not the general way people pick another block and they're doing lower time frame entries and all that. That's not how I do. I have a very unique way that picks the exact point that price is going to reverse from. So that is basically how you follow internal range liquidity to external range liquidity over and over and over. Now, what if I told you that I took a short from here earlier this week? I sold from somewhere around here and took profit around here. Yeah. And my SL was something like this. I remember that trade was a 1 to 6, about 1 to 6 plus. And it is still the same concept of internal range to external range. Let me show you the trade. This is GJ. This is the actual chart I trade. And this is the trade right here. This trade. It was around a 1 to 6 when I took it. Because I left around 1 to 6. But let's go down to lower time frame so that we can understand that it is the same concept of internal range to external range. Did you notice that my range is already here? Because it's the basics of how to understand what market is doing. We have our range from here, this low to this high. Like I said, if you want to understand ranges better, feel free to join the mentorship, right? So this is the range, and you want to see price take out what? Internal range liquidities. it took this one out. It took this out as well. Price takes out this internal range liquidity as well. Alright, this is another internal range liquidity price took out. This is another one. So price has taken out as many internal range liquidities as possible, and it has also entered what? Premium. Remember, you leave it to take all the internal range liquidity it wants to take. The moment it enters premium, now you should be considering where do I want to sell from. And like I told you, I already did my analysis of how I pick my tiny entries, and here it is. So I added this extra space because of spread. If you have been trading for a while, you know what spread is, you know how it works. And that's as simple as that. The next thing after internal range liquidity is what? External range liquidity. So the first target is here. Or maybe that's why I left this trade at around 1 to 6 here. The first target is here. Now I did some further analysis that showed me that price should enter into this zone actually, somewhere around here. So, but the point is, it is the same internal to external to internal to external to internal to external that price continues to do. And I've not just shown you in one example, I've shown you from everywhere. That is how price does. Pick any pair, pick any time frame, internal range liquidity to external range liquidity. That is exactly how price moves. So what it means is that now that we have taken this, okay, let's go back to the one that we were using for our explanation. So now that we are taking this buy, right, the next thing you want to do is what? Just pick the range, wait for price to give us a range. Alright, it has not fully given us a range, but let's assume this is the new range. You wait for it to take internal range liquidity, and now you are looking for where can I buy inside of this lower part, which I told you the lower part is the what? Discount. It doesn't matter whether it's red or green, right? So long as the lower part is discount, that's where you buy from. So long as the higher part is premium, that's where you sell from. So just wait for price to take internal range liquidity, find a good place, and continue the buy to take out what? After internal range, the target will be this external range. As simple as that. Now the only reason why price may not take this place out, remember that after price, broke this place, it didn't come back to take this one out. Why? Because if you check on a higher time frame, that's not the focus of this class. But if you check on the higher time frame, you'll understand that the demand here is where an important buy needs to start. Because price will not continue to sell forever, right? So because of that price, so except there is something like that here, which is not our focus of conversation here, except there is something like that, if there is something like that here, then price may not take this out. But so long there is nothing like that here, the next thing that will happen is what? Internal to external. And in fact, because of this liquidity build-up, alright, when I see liquidity build-up, it is an indication that price has a good chance of coming to actually clear out all of these highs down to this place. Price has a good chance of coming to clear out all this place. I mean, you don't control the market, but it has a good chance of coming to clear those places out. So it is as simple as that. Internal to external, internal to external, internal to external. I want to believe with this you will be able to, improve a lot on your simple, straightforward analysis. I wish you the best in your trading endeavor. And like I said, you want to understand market structure deeper, you want to understand supply and demand, range, liquidity, all of these concepts a lot deeper. Feel free to reach out to me or make a comment to this video and get yourself into the mentorship, because it is a guaranteed way to change your forex story in 2025. Have a great day ahead. Take care.